yet another episode of Beyond Budget Headlines. Lot of action and speculation in the run-up to Budget 2021. We are going to look at some of the important developments of last week with our editorial director and policy expert, Mr. Ashok Kumar Bhattacharya. Hello AKB, welcome to the show.
Hi.
So this year the budget is going paperless, which means we will have to navigate through the whole India budget website. And there is so much information, it can be a pretty daunting task for somebody who has not read the budget before, and for all of us as well, without any paper copies. How should we go about reading the budget?
Well, I think the decision to go paperless is daunting, but I think this was to be expected. In a COVID year, when printing budget documents will have its attendant problems, and also in line with what the situation is technologically all over the world, we need to move to a situation where budget documents need not use up so much paper, which after all, from a climate change perspective, means that much less reduction in the cutting of forests. So I would welcome, in a general sense, that budget documents will not be printed. But my expectation would be that if the budget documents are not being printed, they should be made available through pen drives very easily, not only to the members of parliament, but also to people all over the country if they are willing to pay for it. Because a pen drive will actually be costing far less, and they should be made available to all, and shops and Amazon maybe they should have arrangements with them so that I can download the budget document at a small fraction of a cost.
Yes, absolutely. Obviously, the larger question of how should one go about reading the budget is something we are going to address in our upcoming episodes, sir. There have been reports, there are speculations that the exemption limit may be increased from 2.5 to 5 lakh. And also there is a whole talk of the COVID cess. How will both these things be implemented? How will it work?
The COVID cess or COVID surcharge may be implemented on the direct taxes as such, and direct taxes would mean both individual income taxes as well as the corporation taxes. COVID tax, COVID surcharge may also be enforced on capital gains, on the stock market gains that people have made. We still don't know the details, but a COVID cess and surcharge is something that one can expect, given the fact that the government has to raise more resources. We discussed the COVID tax in one of our earlier episodes.
Yes.
But you have to keep this in mind that if it is a surcharge or a cess, then the center is mopping up the entire additional revenue it gets and keeps it for itself. In a situation of a cess and surcharge, this money is not to be shared with the states. So while the center will feel good about having collected more revenues, the states will wonder, what crime they have committed for not having a share in a levy like a COVID surcharge or a COVID cess. So that is one point. The other suggestion that you made, that there's a speculation that the tax exemption limit, the slab, will go up from rupees 2.5 lakh annual taxable income to rupees 5 lakh taxable income. In my view, it's a dangerous proposal because almost 24 million taxpayers will go out of the tax net.
Yeah.
So, in a base of 55 million taxpayers, and I'm quoting the figures from the 2018-19 assessment year tax data, that year around 55 million individual taxpayers had filed return on that year for their income in 17-18. Now that figure number may have increased in the last 2 years, but that is the latest data we have. Out of those 55 million taxpayers, there are about 31 million taxpayers or those who file the return were in the taxable income category of below 5 lakh. Out of those 31 million, there were about 24 million who were between the income of 2.5 lakh and 5 lakh. Already 7 million people were filing their returns but were outside the tax net. If the decision is taken to raise the exemption limit from rupees 2.5 lakh to 5 lakh, what you will see is this, that in one stroke, another 24 million individual taxpayers who file their returns will go out of the tax net. In other words, from 55 million taxpayers, you will come down to almost half of that amount.
Half of it.
This will probably require the government to raise income tax rates for those who are paying the tax rate, who are above the 5 lakh limit. Now that, to my mind, it will actually create major, stress levels in among the higher income categories, while the people below 5 lakh will celebrate. But I think we have to keep in mind the per capita income in this country and recognize that people who pay taxes even at 5 lakh levels are way above the per capita income level in this country. So paying an income tax of 5% on your income between 2.5 lakh and 5 lakh is not a big amount. And also remember that if you are at 5 lakh income level, with the kind of exemption limits, the tax rebates that you enjoy, you can actually afford not to pay any taxes as long as you are up to 7.5 lakh of income. So up to 7.5 lakh of annual income, you don't need to pay any tax. So I don't understand why this this step should be taken to exempt as many as 24 million more taxpayers to go out of the tax net.
Yeah, maybe the FM wants to give a good news to the people of India and taxation.
Possible, but at the cost of tax reform.
Yes, absolutely. So there's another report in Business Standard that the upcoming budget is likely to unveil a large development financial institution. How will this work in context of infrastructure financing, which is expected to be another big ticket item in the budget?
This country used to have not one or two, but as many as 3 developmental financial institutions till almost in the early 1990s. And I think they were all became universal banks, and the idea of development financial institutions was buried. Now this idea has been revived, and if to create a developmental financial institution in the state sector has got its own problems. It will mean directed lending, and since it will be in the state sector, a lot of political considerations will come in the way of which projects to be financed and which project need not be financed. So, in principle, I think to have a developmental financial institution in the state sector is not a good idea. Instead, steps should be taken to promote the corporate debt market, corporate bond market, which can actually more effectively meet the requirement of infrastructure financing needs. So the need that the development financial institution must meet and address is genuine, but the manner in which this need is being met is probably flawed. And a better idea would be to deepen the corporate bond market to address the needs of the infrastructure sector's financial requirements.
So last year, we've seen a lot of steps the finance minister took to boost the consumption in the economy. This budget, what are the main challenges? Is it going to be spurring demand or increasing the investments? And which way do you think FM is going to tilt?
Well, frankly, the time for giving a boost to consumption demand perhaps has gone. Now, this was the year when you needed to give a boost to consumption demand and revive the economy. Now, next year probably is the time to give a boost to investment demand. So therefore, I would suggest that it will be more prudent to focus on steps that will create more investment demand, which in other words, the government should spend more money on the capex side to invest in creating more capacities, particularly at a time when there are serious questions on whether the private corporate sector is willing to increase its capex. There are some reports that some private companies have lined up some new capital expenditure projects, but the capacity utilization level in the private sector is still very low. So any investment revival in the private sector must follow after an increase in capacity utilization. Since that has not happened, I would imagine the heavy lifting has to be done by the government, and the government must go out to make sure that there is more investment demand in the economy.
Very rightly pointed, sir. A lot of great suggestions about spurring investment and the tax reforms that FM will undertake in this budget. Thank you so much for joining us today. We'll be back next week.
If you like this video, do share it and subscribe to Business Standard. You can also log on to our website www.business-standard.com for more news, views and insights. Do follow us on all social media platforms, and you can write to me at rchitravanshi on Twitter with any suggestions or feedback for the show. Thank you so much for watching. Stay tuned.